Hello traders, this is Jim Comiskey coming to you live on Monday, October the 23rd. Give you my rant basically. Welcome to Comiskey's Corner with our friend Heat Miser. By the way, before I get started here, the opinions that I am no doubt about to express are mine and mine alone and are not necessarily shared by MF Global, okay? Big shout out to Turd Ferguson, tfmetalsreport.com. What started out, seriously, you go to his website, you can check it out. It's a decent little, well, you know, kind of like just a free flow exchange of ideas. We were originally going to limit it to 20 minutes, and it ended up at like 45. So if you got some time, you can listen to it in stages. I got to admit, it is kind of enjoyable. Again, big shout out to Turd. Still waiting for the hat, buddy. His website, tfmetalsreport.com. Okay. First of all, the board reads like QE3 all over again, okay? And in fact, this is more of a continuation of Friday when, if you recall, on Thursday night last, Tarullo, FedGov, he's a voter, he basically openly called for purchases of mortgage-backed securities. Okay, so basically the Fed will absorb the rest of the toxic debt, okay? But another governor, Yellen, let's see, I should say Berkeley, California-based Janet Yellen, Federal Reserve Vice Chairman, by the way. She said that a third round of large-scale securities purchases might become warranted if necessary to boost the U.S. economy challenged by unemployment and financial turmoil. Boy, you betcha. She goes on to say securities purchases across a wide spectrum of maturities might become appropriate if evolving economic conditions call for significantly greater monetary accommodation. All right, so there was one other now too. Okay, right, Fed Pres Charles Evans, Chicago Fed Pres Charles Evans. I mean, basically, this is a Keynesian experiment completely run amok. Okay, the Federal Reserve is going to ease yet again. This is not going to be good. The end result here, and yet another reason to own PMs, okay, precious metals. Because basically this endless printing of dollars, okay, which the Bernanke has forcefully denied, will lead to quite a round of inflation going forward, okay? I'm not smart enough to figure out time horizon, but I'd say a year and a half, 2 years out. Because the Fed isn't going to be able to pull back that liquidity quick enough, nor the Europeans, okay? So this endless accommodating is going to get... It's going to lead to some very dire and unexpected consequences on the part of the Keynesians. All right, gold is currently up at $21 here to $16.57. The silver up 46 cents to 31.65 and a half. Copper, yes, a good comment here on the copper, but you know, I will address the comments towards the end if you don't mind. Try to keep some semblance of order here. Copper is currently up 23. That's a huge move. 345.35. So copper's up almost 7% on the day. The crude oil up $3.98. The greenback down 37 to 72.25. Euro up 77 to 139.36. Okay, basically the Europeans met over the weekend, as I'm sure you're all aware. And actually, it's getting kind of heated over there. I'd love to be a fly on the wall. But Sarkozy and Merkel have said, yes, we've got a plan, but we're not really going to be revealing it until Wednesday. Now, the different countries in the Euro, I believe there's 17, they all have individual meetings scheduled between now and Wednesday. Okay, and in fact, in Germany's case, the Bundestag has to vote for expanding the powers of the EFSF. Okay, so it could get real interesting come Wednesday, but they've really no choice but to come to the table with some type of, yes, QE, okay, global QE. The trial balloons that they've been floating would go from like between $1 and $3 trillion, okay, trillion. All right, let's start here with the Chinese. By the way, another reason why CAT, this is courtesy of Zero Hedge, by the way, why the copper could be as strong as it is. There was a Chinese manufacturing number, their PMI number for the month of October moved up to a 5-month high, as reported last night, to 51.1. If you recall, this the way PMIs work is anything below 50 is indicative of a manufacturing contraction. Anything above, expansion. Okay, so they were below 50 barely. Okay, but they moved back above the 50, well, 51.1. 5-month high. So, that's certainly, like hard and fast numbers, I've said before and I'll say it again, are very difficult to get out of China. All right, this is one that has a tremendous amount of credibility, okay, because the group that is behind the PMIs, if you will, is actually based in Arizona, okay, and they're very coordinated, they're very sharp people. Right. And what they do is they try and release the PMIs globally, like all around the same time window. So you get an accurate read, internationally on the state of the economy. All right, so yes, Caterpillar's earnings was huge, okay, and in fact with the heavy equipment sales in China, it was off the charts. So the Chinese, yes, they're actively trying to slow their economy down. Having said that, it looks as though they're going to have to raise rates yet again. Okay, if you recall, their Q3 GDP was 9.1%. That was regarded as a miss by the street. All right, let the rants continue. German Decisions Day is Wednesday. Crucial details on how the EFSF is going to shape out. Merkel and Sarkozy said in a joint press conference yesterday. All right, there's actually talk of, and this is not real popular, this is going to lead to that Occupy Wall Street movement, if you will, to grow by leaps and bounds. The European Union chiefs are drawing up plans for a single treasury to oversee tax and spending across the 17 Eurozone nations. This is courtesy of the Daily Telegraph. Okay, the proposal put forth by Herman Van Rompuy, the European Council President, will be the clearest sign yet of a new United States of Europe with Britain left on the sidelines. So Cameron and Sarkozy had a big fight over the weekend. I can't believe that actually got out. All right, but the plan comes as European governments desperately try to save the euro from collapse. Last night, they faced a new bombshell. Sources at the IMF say that the IMF would not pay for a second Greek bailout. Would not pay for a second Greek bailout. That's significant. All right, that's quite a change. Okay, from what the IMF has been saying over the course of the last couple of weeks, particularly once Christine Lagarde was brought in as their new president, if you will. This is how politically, this whole idea of a United States of Europe with one central bank. Now, yes, you see the EC, okay, the European Central Bank. Well, really, all the other countries still have their own central banks. Right, but the proposal here is that they close them down, and they're beholden to one central bank in Brussels. Okay, Trichet, Jean-Claude Trichet, European Ministry of Finance. Well, he's the outgoing EC president, by the way. He is calling for the formation of a European Ministry of Finance coupled with what is essentially a requirement for the abdication of national sovereignty of those less worthy countries. I love how they use that term, less worthy countries. Together with some less than flattering commentary. It appears a few people, he was making a speech at Humboldt University, all right. During the speech, the Bloomberg reported that the president was interrupted several times, banners held up by students in the audience reading, wait for it, no more money for banks, just say no to debt tyranny. Okay, so, there it is. Like the story I told you about a kid that was out at this Occupy Wall Street movement with the no puppy mills, ban all puppy mills sign, and I walked up to him, I said, what's with the puppy mills? And he says to me, you know what are you for puppy mills? Come on now. I thought you were against the banks. That's what this focus needs to be at for this movement to really take shape, and it will. And I'll go out there and march with them if that becomes their focus. All right, now just like when you got a family, okay, and the drunken uncle is all but ignored when times are good. Okay, when times get bad, the first guy to go is the drunken uncle. All right, but this, I mean, Germany and France have turned on Italy, the drunken uncle, to demand further action to boost growth and reduce its huge debt. And I'm not talking just about Berlusconi there either. Okay, but they're saying that Italy is a big and important partner in the EC, and further structural reforms are essential. Everything must be done for it to live up to its responsibilities. All right, so again, turning on the drunken uncle. And I use that phrase, I don't even know why, actually. Marty Weiss, it's a gentleman that I've been following for many, many, many years. And he's an older dinosaur to me. He's been in the biz 40 years. But he just issued this, courtesy of CBS Market Watch, by the way, okay? 7 major advance warnings, okay, which are bound to have life-changing impacts on all investors in the U.S. and around the globe. I just want to share these with you. If I didn't know about it, I'd say Marty's been watching me on YouTube or something. Number 1, Greek will default very soon, okay? Number 2, the contagion of fear will spread. You betcha, it's going to come across the side of the pond, no question about it. Number 3, European megabanks will collapse. We've been talking about this for a long time, guys. You know that. Number 4, EU governments suffer new credit rating downgrades. Absolutely. And you know what? Those ratings, Merrill Lynch issued a research report this morning basically saying the U.S. is about to get downgraded yet again real soon. Okay, by like Fitch and Moody's. It was S&P before, if you recall. Okay, I'll continue. Number 5, Spain and Italy next to face default on their massive debts. Number 6, global debt markets will suffer a critical meltdown. Absolutely. A country as large as Spain or Italy goes, my God, it's going to impact debt markets the world over because of repo agreements. These guys all hold each other's paper. Number 7, vicious cycle, sovereign defaults, bank failures, global depression. You know what? I'm going to say it again. I've said it before. I realize that a lot of you people are not Americans, but I use that term almost descriptive as opposed to a geographic, like this is where I was born. As Americans, we'll get through this, but I'm not smart enough to know how bad it could get. Okay, but when you see debt being floated about at an unprecedented level, that's real. It's got to be repaid or defaulted on or restructured. Okay, that's really, there's 3 choices there. That's it. This is, oh God. If you want to read this one, go on Zero Hedge, please. And by the way, I forgot. I got to start posting links so it makes it easier for you guys to follow the stories that I'm reading but don't have time to read, but I wanted to point this out to you. Okay, again, this is on Zero Hedge. It's a guest post by a gentleman named Chris Martinson. Shout out to Chris. The real contagion risk, a bit frightening. 6 pages, but I think it's well worth reading. Okay, now I'm going to go to a couple comments here, and then I'll let you guys go. Okay, BPA1. Spanish banks hold about $2 billion in Greek bonds, according to the Wall Street Journal. That's it. If and when Greece goes, Spain will be minutes behind. Exactly. With QE3, this from Joe Wager, I believe, or Jowager? Joe Wager. With QE3 being activated, I think metals will skyrocket. I agree. Okay, too bad the government doesn't allow air cars from Australia into this country. It would definitely save the U.S. Postal Service. Thanks. Thanks for the comment. Jim, I live in Spain. This is from Lizard Fuel. Jim, I live in Spain. Spain is 100% in deep recession. The only jobs that are left are government jobs, oddly enough, and businesses are closing here every day. You know what? I'm feeling that, but thanks for the comment. Thanks, Jim. The 144 moving average held perfectly in the gold. Blesco, absolutely. I'm not quite even sure why, but the buck 44 did held, and it held beautifully. Now, what I'd like you to do, this is on the Daily Bar in Gold, by the way, if anybody didn't hear that or see that post. But overlay a 100-day moving average and a 144-day moving average in the gold on a daily bar basis, and you'll see it's absolutely beautiful. The 144-day has held like 8 times in the past couple of years, straight up. You know what it might be? And this is pure conjecture on my part. It could be one of these big hedgies. Okay, they might have a logarithm, a computerized program that kicks in, buys the metals both hands when it hits the 144-day. It could very well be, but again, that's speculation on my part rather. All right, I'm going to just continue here. All right, a little bit of exchange on the comments. Now, you guys play nice, okay? Rummo21, do you consider copper a precious metal? And if so, you're saying that one should be long copper in the face of a recession. Okay, no, I don't consider copper a precious metal. In fact, someone here goes on to Silver Ladybug 999, goes on to point out copper is a base metal, and there's no shortage of it at all. Okay, I do tend to agree, but you know, the old saying is, Jeff.
Here's our earnings and their company.
Shh. He's sorry. Thank you, Jeff. Anyways. Okay, yes, copper is indeed a base metal. Okay, there's an old saying here in the markets that copper is like a poor man's Dow. I don't mean that to be derogatory in any way. Okay, but it does move like an index, like the stock market, because it's so widely used as an industrial metal. Okay, as companies are going, as the economy is going, the demand for copper it gets ramped up. Okay, so no, I wouldn't be holding copper in a recession, not at all. But I don't consider it a precious metal. It's still a good two-part question. And that's pretty much all I got, guys. Listen, again, I want you to hop on to Turd Ferguson's website. It's, you know, an awful lot of people have been listening to this thing, and quite frankly, I'm honored. I really am. I'm just going to continue to have fun with this, see how far we can take it, okay? But if you'd like to leave me a comment on YouTube, please feel free to do so. Or shoot me an email. My email address is just the letter J, COMISKEY at mfglobal.com. Or give me a call at the desk. My number 888-800-5373. Look forward to hearing from you. By the way, trading commodities is inherently risky and not suitable for all investors.